Did you know that in the final months of 2025, RAM prices surged by as much as 300% in certain markets? This wasn't caused by inflation, hype, or gamers upgrading their PCs. This was something much bigger, a structural shift driven by artificial intelligence. For years, RAM was treated like a commodity. Prices went up and down, supply followed demand, and consumers always had access. But in late 2025, that model broke. The reason is simple. AI infrastructure is consuming memory at a scale the consumer market can't compete with. Modern AI systems don't just rely on powerful GPUs. They require massive amounts of memory to train, store, and run models. Data centers building AI clusters now buy memory in volumes that dwarf the entire PC gaming market. When AI companies place bulk orders, they don't negotiate. They reserve capacity. That leads us to the supply shock. Memory manufacturers realized something critical in 2025. Selling RAM to consumers is low margin and volatile, while selling to AI and data center clients is high margin and locked in for years. Once that realization set in, production priorities changed almost overnight. This is where Micron technology comes in. Micron made a strategic decision to shift away from consumer-focused memory and redirect supply toward enterprise and AI clients. That decision directly impacted Crucial, Micron's consumer brand. By scaling back Crucial's consumer availability, Micron freed capacity for higher-value AI contracts. This wasn't a crisis move. It was a profit maximization move. At the same time, other major memory producers followed the same path. Instead of producing standard DDR memory for PCs and laptops, manufacturers prioritized advanced memory types used in AI servers. These products generate significantly more revenue per unit and are sold through long-term agreements. The result? Less RAM for consumers, and prices explode. PC manufacturers immediately felt the impact. Higher memory costs increased laptop and desktop prices, squeezed margins, and forced companies to make uncomfortable trade-offs. Some systems began shipping with lower memory configurations, while others quietly raised prices without explanation. But for investors, this disruption tells a much bigger story. This is no longer a short-term shortage. Building new memory fabrication plants takes years and billions of dollars. Even if demand stabilizes tomorrow, supply cannot quickly catch up. That means tight memory conditions could persist well into 2026 and beyond. Now let's talk investment implications. Companies that produce memory are in a position of power. When supply is constrained and demand is locked in, pricing power increases. That's why memory manufacturers tied to AI infrastructure stand to benefit from higher margins and more predictable revenue. At the same time, companies that consume massive amounts of memory, especially AI infrastructure players, continue to scale aggressively. Every new AI data center requires enormous memory bandwidth, reinforcing long-term demand. This is also why AI hardware leaders remain critical to watch. High-performance processors rely on advanced memory to function efficiently. Without memory, AI doesn't scale. On the flip side, consumer electronics companies face pressure. Rising component costs reduce flexibility, especially for companies without strong pricing power or vertical integration. Some will absorb costs, others will pass them on to consumers. So what's the takeaway? The RAM price explosion of late 2025 wasn't a fluke. It was a signal. AI is no longer just software. It's restructuring global hardware supply chains. Memory has become strategic infrastructure, not a commodity. For investors heading into 2026, this shift highlights a clear theme. Follow the bottlenecks. When demand overwhelms supply and can't be easily fixed, the companies controlling that supply gain long-term leverage. And in the AI era, memory is one of the most important bottlenecks of all.